Another video. Now, if you've been wondering why the dollar index has been falling the way it did for this for the lateral part of this week, that is exactly what we are going to discuss in today's video. We're also going to take a look at gold, NZD USD, the Nasdaq, and GBP USD, and I'll give you my idea from a technical and fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content. Also, thank you so much to all the members of the YouTube and to everyone else that's taking out their time out of their daily lives to come and enjoy the content. Also, if you are looking for mentorship, signal services, even assistance in passing a funded account, you're more than happy to check out the website. The link is in the description below. Now, it's very important to understand one thing. The dollar index is driven by consumers. Consumers spending, consumers not spending, and that automatically then falls back into the stock market, then falls into any pair trading against the dollar, as well as precious metals, which are negatively correlated with the dollar there as well. Firstly, the reason why the dollar index has fell is we can see here this article from CNBC says here treasury yields fall as traders are awaiting key housing data that's being released today at 4 p.m. Now, government bond yields acts as an indicator of the overall direction of the country's interest rates and expectations. So, for example, in the US, you would focus on the 10-year treasury yield. Note, a rising yield is good for the dollar and a falling yield is bad for the dollar. Now it says here treasury yields fell again on Wednesday as markets awaiting the housing sector data, which is coming out at 4 o'clock today. The 10-year treasury yield was down just over 4% and was trading around the benchmark note has come off the 14-year highs. It was trading around just last week when it soured to as high as 4.3%. It says here the yield on the policy-sensitive 2-year treasury yield was last at 4.42, have declined by 4.67 basis point. It says here investors will be paying close attention to the release of the new home sales data for September, which is due to be released today in August. On Wednesday, which is today, and in August, the figure had a 5-month high coming in above market expectations. However, data published last week showed that existing home sales had declined in September. Talks about housing recessions have been spreading as the sector is highly sensitive to interest rates. Basically, home sales are very sensitive to interest rates hikes, because why? Basically, when interest rates are hiked, that automatically negatively impacts the consumer because their rates on their houses also now increase. It says here the Federal Reserve has constantly been hiking rents in effort to push back against persistent inflation with a further 0.75 basis point, which is due to come through at the 1st of November. On the 2nd of November, the Fed is expected to hike interest rates by 0.75 basis point, taking it from 3.25 to 4% there as well. There is further here that some investors have been concerned about the impact this may have on the US economy. Traders have therefore also been paying close attention to earning reports, and that is exactly where we are now. Alphabet misses on earnings as YouTube Strings company will cut headcount growth by half in Q4. Now, these two companies both listed on the Nasdaq 100, and this negatively affect the stock market as well. Now, apart from high interest rates, which is already affecting the stock market as it is, a negative earnings report also further implicates the situation on the stock market there as well. Now, let's just jump straight into the technical analysis. Now, keep in mind that we do have the housing data pulling through today, and although the report says that there has been some talks about negative reports and all of that stuff, I do believe a correction is expected on the dollar index before the continuation to the downside, even to the upside, with the prices of the interest rate hike further going to impact the dollar index even further. Now, here on the monthly time frame, it's very clear that the market had broken below this very strong level of support, came back, tested it as resistance for the very first time. The market is now also finding support at this level over here, or has about to find support, and we can just take that week into consideration there as well. Now the market is now stuck between this level of support that is now resistance and this level of resistance that is now acting as a level of support on the weekly time frame. What do we have now? From a weekly perspective, it's clear that the market had printed this level of support. Now, resistance. Once resistance gets broken, it becomes support. We also have what we can see as a massive impulse. After an impulse, you expect a correction. Now, if you take your Fibonacci from the low to the high of the impulse, you can see that the market had come to test the 0.50. There is a potential that we could see the 61.8 being tested there as well. Now, from a daily perspective, again, we have a nice clear impulse. Now we have this impulse starting at this level. We have this we've got this impulse here. We expect a correction. Now apart from that, we also have what we call here an information. Now after an information, you expect a pullback to the neckline before the continuation to the downside. Now after an impulse, you also expect a correction, and taking off Fibonacci from the high to the low of this impulse that we have over here, we do have the 78.6 lining up perfectly with that level over here that we expect the dollar index to pull back to before a continuation to the downside. Now I do expect the dollar index to increase in value. Alternatively, if the housing sales does pull through negative for the dollar index, we could potentially see the market slip below this level there once again as well. Now the best way to approach this is obviously to be reactive. Now if the housing sales come through positive, this move to the upside is definitely expected. Alternatively, if it comes through negative, we can expect the dollar index to slip below this level, turning that level of support into resistance and start that continuation to the downside until the Federal Reserve start hiking that interest rate once again. But again, my bias will remain bullish for the short term, even for the long term on the dollar index, as I do expect the correction to take place as we speak at the moment. Next up, we do have gold. Gold here on the monthly time frame. We know that gold has broken below a very strong level of support, right, and came back tested as resistance on the weekly time frame. What do we have now? This is exactly what I spoke about the last time. We have a market trading in bearish territory. We have support that got broken, came back to test it as resistance, and we do have the market now also printing this head and shoulders pattern. We have that impulse correction, and we expect that continuation to the downside. And because gold is negatively correlated with the dollar index, and we definitely expected this move to the upside on dollar weakness. The market's now testing this level here once again. This acted as a level of resistance. Market broke above that, tested as support. Support did not hold. Market broke below support, tested it as resistance, printed a W formation, pull back to the neckline, continuation to the upside, testing resistance once again. The market also now printed new resistance. Now after a level of resistance is created, we normally expect a pullback. So there's definitely a pullback expected on this level here on gold here once again, and the best way to approach this is obviously to go with the short-term momentum of the market as we anticipate a pullback in the dollar index. Next up, we do have NZD USD. Now NZD USD is currently broken below, also in bearish territory. The market broken below this very strong level of support. Then we can see the market's almost back to test it as resistance from a weekly perspective. What do we have on the weekly time frame? We had the market printed this equal low. We have that pullback. However, we also have this massive impulse. After an impulse, you expect a correction. And if you take your Fibonacci from the high to the low of the impulse over here, you can see we had a pullback to the 38.2, where we can expect the market to pull back from. Now, here on the daily time frame, this over here is a level that needs to be taken into consideration because we could potentially be at a liquidity hike. Now you can see here from a week from on a 4-hour time frame, this is exactly what I'm speaking about, as the market is testing a very strong level of resistance. Now it's very important that we are reactive, not predictive. Now I do expect the market to definitely continue lower to go and test this level here at least, because if you take your Fibonacci from the low to the high, we do have a 0.382 pullback that's lining up perfectly with that previous level of resistance that's now acting as a level of support. Next up, what do we have over here? We've got the Nasdaq 100. The Nasdaq 100, basically, what I see over here, just by identifying what we have and news at the back of my head, is the market is definitely going to complete this W formation at the neckline. So I do expect a pullback on here before a continuation to the upside. The pullback could potentially start straight off the back, or we could alternatively see the market make one last move to the upside to go and fill in that 50% body to wick ratio candle that we have over there, and that continue that move to the downside. Next up, we have GBP USD and GBP USD on the daily time frame. As you can see how the market had broken above a very strong structural level over here. Now, this level acted as a level of resistance. Now, the market had also printed this overextended W formation. After an overextended W formation, you expect to pull back to the left leg before that continuation to the upside. Now, on this, I do expect a pullback there as well for the market to come and test that previous level of for the market to come back and test that previous level of resistance as support. I'll give you guys an update once we get to that level once again. Thank you for your time, and as always, cheers for the years.